everyone. Today's February 10th. I thought I'd throw up a blank chart and have a little fun with you guys. So, we're looking at the SPX 500. Markets are rolling, big bounce off of this low, huge volume selling. I mean, massive volume selling. Now, my predictive modeling is telling some interesting things. I'll talk about that in a minute. My sector analysis is showing that value sectors and dividend sectors are really outperforming the market right now. I believe that's a sign that traders are running for the exits in some ways. We still have a dominant U.S. market, meaning it's the 900-pound gorilla in the global markets. That's a good thing. That means that we may end up seeing some moderate melt up. I'm going to show you guys some things here. I want you to understand that we are extending an upward cycle trend that kind of extends like this. So if you look at this and you consider the upper channel, this is kind of the upper channel that we are extending forward. And you could probably do this just as easily with a standard deviation or linear regression channel. Yeah, so that's probably a 1x. Yeah, so I'll make it a 2x. So there's your channel. Now, what I'm trying to do with this is to show you guys that as long as we stay in this channel, then we're relatively safe in terms of a melt up. Okay, so generally we're in a melt up type of a trend. As long as we stay in this trend, we're going to be okay. Now, what I'm concerned with, and this is again talking to you and having a little fun, is Fibonacci. And I'm going to talk to you about Fibonacci and the excess phase peak patterns right now. We're going to highlight these. I'm going to leave the blue lines, get rid of the linear regression channel, and explain to you that Fibonacci price theory is telling us that we've had this very strong close below these lows and below this low and below this low we had right here. Deep low, deep low. Whereas we have failed to move and see a close above this high. I'll make that red and slightly smaller. We have failed to get a close above this high, which means that this high is acting as a very solid resistance channel based on Fibonacci price theory. You can see that I am trying to mark this right at this high. We've got no closing prices above this high. This level right up here, 6,995 roughly, is a very strong resistance channel, and that I personally believe, that this move is going to move down into kind of a flagging formation, possibly down in this area and this area, maybe out over the next 4 or 5 days, and potentially moving into this type of a channel. So we've come up, double topped, come back down, A, B, C, D, E. I believe that's highly likely given where we're at. The actual reversion mechanism here, now understand that if we take a look at these lows, and we'll go up to this rejection point here, and we come into here, template, Brad's colors. I don't know how I changed everything to red, so I've got to set it back. So at this point, guys, we're using the Fibonacci defense levels. Bring the front. Okay, it's already front. We're using the Fibonacci defense levels, which are here and here, as core elements for defense. So we would be looking potentially for a breakdown below this level right there, and that's going to be 69.28. as a breakdown level. We're currently back in this upper range, which is retesting resistance, just like I told you. And the reversion, 50 to 60% range down here, puts a 50 to 60% reversion rate potentially right down in this level. Now, I believe that the markets are going to come down and test this lower support, stall out, and then attempt to break to the downside. That's what I believe is the most likely outcome right now, even though my predictive modeling system says that the S&P and the QQQ will stay more moderate rotation like this, a flagging type of pattern, while the value sector and the dividend sector continue to try to melt upwards. So I'm trying to warn you that predictive modeling says things are going to stay sideways for the next 10, 15, 20 days. Value and dividend sectors say they're going to continue to melt up, probably 1.5 to 2.5%. And where we're at with the S&P and the QQQ is likely into this flagging formation, establishing a tighter, more narrow range, which is going to come into eventually moving down into this, let's call it the middle zone, Fibonacci, which is pretty much right here to here. So this would be the middle zone, Fibonacci. And this is my target support area. I'll make this kind of a light green color. And I'll make this a light blue. So there you go. If I were to tell you what I think is going to happen, I think this is going to happen here. Now, why is this so important? Okay, here we have fun with the excess phase peak patterns. Okay, excess phase peak patterns, if you follow my videos and my training, you can see a bunch of videos on TradingView I've done, a lot of training videos, a lot of morning analysis videos. I mean, there's probably, I'm going to guess, somewhere around 200 or 300 videos I've created for you guys to continue to learn techniques and learn how to use trading techniques efficiently. Remember, you're not necessarily, if you're trying to trade the short-term swings, that's fine. You can use these exact same techniques on 1 minute, 2 minute, 5 minute, whatever you want. Okay. But I like to set up for the bigger, broader swings. I didn't expect this big bounce. So, I mean, that's a move that happened beyond my expectations. My predictive modeling system did not predict this big bounce. It was telling me moderate downward trending was likely to happen. And now it's changed into moderate sideways trending for the S&P and the QQQ. So, you so win some, you lose some. And to be honest with you, I caught such a nice move down here. I was able to pull 70, 80% of my trades off at huge profits. I left about 20% of my trades on, and I started adding more shorts back over here. Okay, I added a little bit here and then added more back over here. So now, where am I and how am I going to play this? Well, let's take a look at the excess phase peak patterns. I'm going to draw those in heavy lines. I'm going to start off with this big rally here coming up into this double bottom low. That creates a pullback flag low, comes up, breaches into our double topping pattern, slightly above our flag high level. This is very clear rejection. If we were to move below this lower flag level, breaking down, then we would end up moving down into consolidation and eventually down into an ultimate low. So understand that we have an excess phase peak pattern that is setting up. And the way I do these, remember, I measure the flag high to flag low, which is basically from here to here. And I would copy that, drag it down here. There's the flag low level. It's a 100% measured move. And there's the ultimate low level. So this would be the ultimate low. This would be the consolidation low. if it happens. If this big breakdown happens, that's what we're looking at. But here we go, guys, a little bit more fun. So now we look at this little excess phase peak. We got a bunch of them up here. So I'm going to show you. I'm going to draw this one in light blue coming up here. There's one excess phase peak. Let's do that in light blue. Try to pick it light purple. One excess phase peak pattern setting up right across this low. Then we have another one setting up right here in blue, setting up another flag low right here. And luckily enough, look here. The current market trend sets up another. Draw that again. Flag low. Setting up a deeper low level right down here. So we have three flagging patterns setting up. Let me make this slightly a different color so we can see it. Let's make it kind of an orange color. What does this mean? Well, gee, Brad, what does this mean? That means that we're running into severe resistance. We're getting into breakdown levels, and we have three separate levels. We have this purple level, which I'll draw in a line, a heavy line, purple, across this flag low. Setting up as purple. We have another flag low, setting up over here in orange. See if I can come in here and grab that purple line, make it thicker. And then we have another one setting up right here in blue. And what this means is that these critical levels, these blue, purple, right here, become our breakdown lows. So we have a breakdown low, whole bunch of breakdown lows setting up right in this area, indicating that any type of a major breakdown below this level is going to start a series of massive pullbacks. Now, it's pretty simple. I'm going to do these each independently so you can see them, but it's pretty simple because they all have about equal high to low flag ranges. I'll just start with this one to this down low, so I can basically say that from here roughly to about here, again, trying to average these three ranges gives us the pullback level. So then at this point, we would have a horizontal line. Oops. Telling us where the consolidation level would be. And that will give us the range that I'm looking for. So a breakdown below this low, any of these levels, theoretically, would put us into a consolidation zone somewhere around here, and then put us again into an ultimate low pattern somewhere down here into the consolidation range. So what's happening here is we now have these triple excess phase peak patterns indicating that a consolidation low would come in here and an ultimate low would come in here. What does this mean? This means that initial breakdown level is likely to come down to this 40, 64, or 84 level. Ultimate low level could be anywhere in here to this consolidation low right here. So we could be anywhere in this range. And if we get that continuation downtrend, we could see an ultimate low down here at 58 and change. Now, you say, well, this, how can that happen? Okay, well, look, how can that happen? Excess phase peak patterns on Bitcoin. Excess phase peak pattern number one with a larger low, excess phase peak pattern number two with the breakdown into consolidation into the ultimate low pattern down here. Remember, the consolidation low is going to be roughly equal to this range. We just measure this range from here to here roughly, copy it down, try to get my mouse to cooperate. Deep low consolidation right here. Ultimate low pattern right down here. Why are we extending downward? Why do I believe we're going to get a broader consolidation move down here to 35,000 on Bitcoin, or at least below 50, I think, is because the shorter term excess peak pattern is played out completely. Set up the ultimate low. Okay, that's the ultimate low right here. Deep, deep low below our ultimate low level. That's this low level right here. I'll make it bright red. That's our ultimate low level. We've gotten below it. We're below the ultimate low level. We're below the flag level here. We've broken down because of this flag level. Now look, because of that flag level, we're now looking at a breakdown flag like this with a horizontal pattern here. Breaking down into this area. Consolidation range. So given the fact that we're below this low, below this particular flag low right here, and that indicates this excess phase peak pattern is currently moving into this deeper consolidation zone. I believe that we're looking at Bitcoin moving down into this area from here, consolidating, moving down into this consolidation zone. So what this means is that we could be looking at a broad unraveling of the markets. We could be looking at a continued breakdown into this July, August, September low. Bitcoin could be trading below 50, 45, 50,000 here in the next month or two. And the S&P is setting up in a very similar format, indicating that a broad breakdown could be occurring, representing a potential move of about 15 to 17% to the downside. So this could be somewhere between minus 15 to 17% pullback right over here. So this is how you can use Fibonacci price theory and price action to determine what's actually taking place. Obviously, I've been doing this for a long while. I just wanted to give you a quick update. I'm not going to go into a whole lot more detail than this. Just be aware that failure up at this area with the reversion again back down. Let's talk about the more immediate reaction to price right now. Here's current price. Failure up at this area, indicating rejection at this resistance area, would indicate a downward trend. I believe we're going to move into flagging, just like you're seeing here. And I believe that's going to be the next phase for the market, indecision and flagging. Then I believe we're going to move into a breakdown that's going to break these three lows, which is going to be our last support zone, or what's called the breakdown zone. And that's going to be an indication that we then move down into the consolidation low. So theoretically, if we get this flag and we break down here and then move into this consolidation low and then move into the ultimate low, as you guys have learned by looking at the Bitcoin chart, can be deeper and uglier. So we could then move into this ultimate low down into this consolidation zone, because remember, as soon as we break this area, right, well, doing a little box, as soon as we break below this little area right here, this is the excess phase peak number 2, flag low breakdown. As soon as we cross that level, which is 65.50, then we are moving into this ultimate low, or sorry, this consolidation low right here, which happens to align right here with this ultimate low, meaning that we're going to be moving into a very solid breakdown. So again, flagging down, up, down, stalling, down, ultimate low. That's what I believe the price structure is telling us will happen. The only thing that I can tell you right now is that any what's called invalidation of this pattern is going to occur as a rally. So if we get any type of a rally, I'll do them in these little arrows. If we get any type of a rally up here or here, moving higher, or here, then these would invalidate my triggers. So as long as we stay below this level, which is actually slightly higher than this level, as long as we technically stay below that level, that heavy level right here, 70, call it 70.40, or you could call that 700, 701 on the S&P, or maybe 703, but not much. As long as we stay below that level, that's still just rejection, just setting up these little high points, rejecting, high point, rejecting, just like we saw right over here. We need to clear this with a pretty solid rally to the upside, and we would need to clear this upper level, 700, 701 on the SPY, 7,000 on the SPX 500. This moderate weakness, like I said right now, is an indication to me that we're looking at this breakdown, flagging, consolidation, structural component playing out. So that's why I'm holding my shorts. I'm not taking any new positions right now. I'm just holding on to my shorts, making sure that I am positioned well enough. I've had a little rotation over the last couple of days, but nothing too ugly. And that is your update. So again, I want you to see how this Fibonacci price structure and price theory works, as well as how these excess phase peak patterns are playing out. And like I said, if we get rejection, if we get above, I'll make it a big blue line. We get above this big blue line up here on a strong rally, then all of this invalidates for now. Okay, we're back into a rally phase. If we don't get above this blue line right here, and we stay in this sideways flagging rotation like I'm talking about, then very likely we're going to see each one of these phases play out over time, unless we get rejection, which are these green arrows. So there you go. I've just laid out the next 3 months. As long as we don't get rejection, I've laid out the next 3 months of the S&P and the QQQ for you. Not that hard when you study and you know what you're doing. And again, everything here can be applied to 5 minute, 1 minute, 3 minute, 10 minute, 20 minute. You could apply this same technique to any interval. Okay, guys, hope you enjoy.